Hello and welcome to the Big Q. I am Isabel Masozera. Now, if you've been watching over the past few weeks, we have brought professionals in the market that is the stock exchange or the capital markets. If that's something that you have a lot of interest in, then I'm so glad you're watching today. We've talked about why you should invest in stock markets. We've talked about who makes sure your money is safe, but we haven't talked about it in detail. So today we are speaking to a lady who has over a decade of experience, and she is actually Rwanda Murigo, who is the market supervisions and inspections manager. It's good to have you on this seat. Yes, we've had people in this seat that you are having today talk to us about why we should get on board, why we should not be so afraid when it comes to giving our money, to this space that sounds a little bit Chinese. But can you help us understand from the onset what investor protection means, and also in the very context of the responsibilities of a regulator, and that is what you guys do. What's your role?
Thank you, Isabel. Yeah, as you have said, the people come and entrust with some people that they have not known before with their money and their their funds and their savings. So it's more about now putting in place safeguards, so that their investment or savings do not disappear, or do not just defrauded on all that. So the regulator, and when we talk about investor protection, it's about the mechanism, or you can say there are tools that we use as regulators to protect now those savings and those investments that have been entrusted with those financial service providers that are out there, that have been licensed to provide such services. So when we talk about investor protection, the mechanism that we use, we start by putting in place regulations. These are about the code of conduct.
Okay.
That is one. How they will conduct themselves. The requirement for them even to be allowed to provide those services. So when we license them, we need to see if they're fit and proper. This is a common language that is in financial markets. They are fit and proper. Are they fit for this job, for the services that they are going to offer out there? So when we talk about fit, are they? It's about integrity, honesty, capabilities in terms of experience. Can they advise properly? When we talk about integrity, these services require fiduciary duty,
yes,
and loyalty, proper care, and all that. So that's why we check on all that. And on top of that, do they have the capabilities in terms of capital requirement to run their business without touching investors' money?
Yes, yes.
Yeah, those are the more or less the requirement we look at when we are licensing the financial service providers, depending on the service they wish to offer to the investors. So we look at that. So we need to know what their target, what their strategies, who are they looking at, what type of services they are going to offer. So we look at, that's why we have different types of licenses that we offer. So after that, after putting up the regulations, code of conduct, and principles that guide them, now we come to the supervision. The supervision is now when we go and check with whatever they have said they will be doing. We check if they are doing it on a daily basis.
And is that manual? Do you physically go to these places, or do you have some different tools that perhaps can enable you to do that virtually. And the reason I ask that is, if there's anything COVID-19 has taught us, well, you cannot be everywhere when you want to be there. So, for example, in that context, how were you able to ensure that they're actually doing what they're saying they're doing? Do you mix the two? How do you do it?
Yeah, we mix both. There are those that we do oversight. Well, oversight that we do off-site. I mean, where we are from our offices, we request them for reports. They report regularly on their businesses, on their financials, on their trading, if they've been in trading, on their investment, asset under management. We request all those reports remotely, but that will not be sufficient, because we need now, when we go there now for on-site visits, we need to check those internal controls that they have been saying they have. Do they put it in practice? If I get, like, at the reception, what kind of service will I get if I was a customer? From the reception, will I receive, like, all the care that I may need? Will I find that from the front, will I find that someone who is attending to the investor has the knowledge and the capabilities to do so? Those are the internal controls that we request for them.
It sounds like it's a very many people kind of job. Like, you need a lot of boots on the ground. You carry the title Market Supervision Inspection Manager. I assume all these people work with you to ensure that this is done. How big a team do you need? Because I assume there's a lot that goes into really inspecting to ensure they're doing what they're doing. And I say that because I assume it's easy to stage, I'm doing a good job. I know you're coming on day F, and I do everything I have to do. So the element of surprise and all of that, for you to carry that through, might require quite, some...
Well, we do not surprise them unless there is a reason why we need to surprise them. They need to prepare beforehand. And again, the primary responsibility of oversight remains with them.
Okay.
Yeah, that's why we look at them from the start, from the entry requirement. That's why it's not allowed to everyone to provide those services, because they need to have those responsibility themselves. So when we do the checking, we look at even the tone from the top. What are the behavior from the top? What are the behaviors that we can see from from the management? Are there some safeguards? For example, one of the example, if someone needs to commit a crime of fraud, will they be eased to do so? Or that there are some safeguards? For example, they want someone who executing investor's order is different from the person who pays, who make the payment and all that. We check all those things. Those are required just for making the safeguards necessary to protect investors. So what are the supervisory role that the top management plays? Do they check and see and verify if all the requirements are being fulfilled within the institution? You will find, for example, they have taken a decision where the decisions taken implemented. So those are the few things that we may check to see the trend within the trend. And something else that can tip us, it's about the complaints.
From the
investors.
From the investors.
Yes. Yeah. How many complaints have they received? Because if someone would say that it's zero complaint, even that itself could be a red flag.
Of course.
So does it mean even someone didn't come even to request for the delay on dividends? And yet,
these complaints being made to these companies,
yes,
or even to you?
Even to me.
Okay.
So, for example, I can receive a call from an investor saying I've been about the delay the delay on the dividend and all that. And for example, if I go to for the inspection, if I don't see that complaint recorded, it's a red flag. There is something off, yeah. So investor protection also will look at those ones. The complaint about the any complaint that has been made by investors. So we take good care of that, and we look at the process. Have they resolved it? If not, why? Okay, now if it has not been resolved, now we check with the complainant. They are free to come to our offices and
you have an open door policy.
Yes.
They can come anytime and express what the issue is.
Yeah. For investors, the doors are always open because, you know, once you lose the confidence in the market, you lose everything. The market can no longer exist because it is built on confidence. We have to safeguard it. So that's why even from the financial service providers, they are keen to protect themselves from the reputational risks, because that could harm them on a great scale, not only in this market, but wherever they can go.
Yes.
Yeah, because whenever we have a negative report on them, that is something that can affect even the entire business, wherever they could go even to expand their business in other jurisdictions and all that. So this is something that even them, they are aware of.
Yes.
So that's why when we talk about mechanism of investor protection, we talk about the entry requirements. This is about the licensing. It's not everyone who is supposed to be.
You gauge the credibility of the provider from the
Absolutely.
Can we dwell a little bit on that? Because a lot of potential investors have this fear, and I've talked about this even on the previous shows that were part of this series, where there's been pyramid schemes that looked quite credible from the beginning, and there's been all kinds of companies that come in, and not just within Rwanda, East Africa, globally, really. And later on, things kind of, they don't pan out the way that they're supposed to. In the event, you see red flags during your inspection, during your supervision, what are the steps that you take thereafter to get to the bottom of things and weed out some of those that should not be part of the market?
What we do investigations. We are empowered to do investigations.
Do you notify who you're investigating, or is that done privately?
We can notify because they are required to provide us with whichever information we may request. So we may do investigation without necessarily noting about what we are doing. We request for information for some reasons, because this is part of the job that we do. So when we request for information, what we need to do is to verify about the allegations and all that. But when it goes beyond what the authority CMA is allowed to do by law, now we can even go to the competent authorities, court and all that, to do that. But when it comes to those Ponzi scheme and all those who call upon people to invest and all that, you will find quietly that it's most of the time these are being done by non-licensed entities.
Yes.
Because licensed entities, they know the realities that are on the ground, on the market. So when people come and give, the performance that can't be beaten even on the market, you are like, okay, it's something that can always be that is always it always comes from those that are unlicensed or who are not aware, who look at it as an opportunity, but who do not know the market itself. So that is a criminal offense, and there are competent authorities that could deal with that.
You work closely with to punish the offenders.
Yes, the offenders. The law provides for such offenses, and the next is for the competent authorities to deal with the next step. For us, we deal with those who are licensed, those who are there to provide for the services that they have noted down, that they can't go beyond from what they have promised or they have showed us that they will be providing. So it's not saying that they cannot expand, but whenever they want to expand, let us know. We are there to know what you are doing, because we need to know people out there are protected. So everything we request, it's not for just for being like heavy, no, heavy on the market, these are international standards, but the objective of all the requirements that we have there, it's about investor protection. Actually, that is the principle, the main mandate of CMA.
Yes. So CMA is regulating. It's looking out for me as an investor. Let's talk about where the compromise is and how that affects quality, right, and safety. Because when you have SMEs now that have become quite the interest, because as I was having a conversation with some of your colleagues, it was made quite clear that the SMEs, they really contribute massively. And for this market to grow, you need to onboard them. To onboard them, you need to compromise on a couple of standards when you are, so there's a little bit of compromise, even though it's from the other side at the end of the day. But still, for these companies, I would assume layman understanding that might affect to a degree the safety or the checks, or does it not?
Well, these are two different aspects. We have gone to the other aspect now for those companies or SMEs that seek for capital.
Yes.
Yeah, so we have different regulation around that, guidelines for SMEs, just to ease them, and we have an alternative segment for them, just for them, customized for them. So the requirement, we request them just for those key ones, the building blocks, for the SME to come on the market, to provide the safety to the investors. For example, one of those that we require, for example, we may not require like a big board, like for other companies, they might be 7 or plus. But for them, at least if they have 3, they have one who is independent among them.
Yes, yes.
Who should be the chairman? At least the corporate governance, so that the governance is done in such a way that investors are protected. The best interest of investors are protected. Other disclosures, that they might not have like financial history, they might be new, or the performance may not be that high, but whatever they have, disclosure. We request them to disclose, and disclose in such a way that people out there can invest based on, can take decisions based on the data that they have received. We don't like one of other requirement that was eased for them. They don't have to have like a minimum capital.
Yes.
They don't. Like for other companies, they need to have like 1 billion assets. But for them, that requirement has been removed so that we can interest them to come. Once they come and they expand, they will go higher and higher and get to the upper segment of big companies. That is the objective. We need to develop the market. And we understand that the makeup of our market is SMEs.
Yes.
Most companies are SMEs. So we could not neglect that.
Yeah. Yes.
So that was
the thinking that is behind that.
Yes. The other building blocks that are about disclosures and the corporate governance, but the few things that we need to just to have for them to be a safe, for investors to be in a safe ecosystem.
Yes, yes.
Yeah,
our time is quickly spent. But what are some of the challenges that you still grapple with? I mean, it's over 10 years you're in this business. What are those that you've managed to overcome, but what are those that still remain a pain point to date for the kind of work that you do?
Well, we see people getting interest in the market, the number of investors increasing, but we still have the challenge that we have, because for someone to take a business decision to come to the market, you will find people thinking, maybe because they have seen big companies over there, say this is might not be for me.
For me, yes, yes,
it's something for big companies such as those that we have on the market.
Yes, yes.
So that has been a challenge, and the challenge, another challenge is about apart from the mindset. Now the disclosures, for a company to be ready, it has to have, like, the records and all that. So you'll find maybe they have not kept the records appropriately, so that they can, in such a way that they can build a prospectus or the offer document that is needed to the market, or purely because they do not know. So we've been here and there making public awareness and all that, but still having...
It's still a problem. But has the investment clinic contributed to some degree? Because that's part of their mandate, to help them get their financials in order and all of that. Has that contributed significantly?
Yeah, already we have seen one that has upgraded from the investment clinic to the, now it has issued a corporate bond. And we see, at least it has given a positive signal that now people are starting to buying in and getting to the market. When a company sees that it had to pay, like, every month on a monthly basis the loan that they have, but now they have to pay, like, in a year they pay twice. In the meantime, the money is still doing what the project is still in the system, in the company, doing what should be doing. It's something that can encourage even others to come on board. And that's why we've been encouraging them to come to join the investment clinic, and I'm sure that after the first cohort, these people will pave the way to the next cohort, and maybe we will see things evolving, SMEs coming, and that fear being removed completely.
And speaking of fear, that is the whole reason why we're having this conversation. It sounds to me like this is really thought through in terms of governance, in terms of the checks, the balances, making sure that investors are really catered for and protected. When you talk about the relationship between you and, for example, some of the players within the market, where do you see untapped potential? For example, areas that have not been leveraged but could potentially benefit the market lucratively?
Well, I think they need to go out there, and now, even though now the platform has been created for them, but until it was created, that platform of the investment clinic, they were not eager to go out there and look for those SMEs. So that was still an area that was untapped. And thanks to the investment clinic, that now it has at least put in place, it has set up the platform where those service providers, financial service providers, and also the SMEs can now gather and discuss and check on the readiness. Something else that is coming now, the involvement of these collective investment schemes.
Yes,
Yeah,
yes, yes.
this was, until Iterambere was set up, it was something that was not, was completely absent in the market.
Mm-hmm.
But with now we have two collective regulated collective investment scheme. We have Iterambere, we have Agoka. Now we see those from small earners, income earners, to higher,
yes,
they can fit
have a place that they can belong.
They can belong, and they
Hopefully
can.
we see more than two in the future.
Of course, there is nothing that stops the service providers to put in place theirs. It depends on what kind of product are you going to provide. So, for example, these ones are about, they invest in most of the time they invest in the fixed income government bonds. There might be other that could invest in other in other products.
Yes.
So there are there are a lot of potential
Yes.
in collective investment scheme, and as we go along, as we grow, as we get to have more product, they can expand the thing is, when we have we have few products, even the collective investment schemes, they are like concentrated in one, you know, like those two, they are like concentrated, though they are not the same, but the concentration of their investment, given, if you can see in their offer documents, are more or less the same. So as we expand and we have a lot of more products. They could have, we could have other collective investment schemes which are directed to, which could take other directions. So it's something that
we hope to see that. I know, but we have just a few minutes to go. A friend of mine was talking to me and really wanted me to ask this question, so I'm going to be faithful to that effect. They wanted me to ask, am I always better protected as an investor when I strictly make sure that I'm investing in an organization, an institution that is regulated by you guys? Number two, when it comes to instruments that are issued, is it always safer to go for those that are regulated versus private ones? What would you say to that?
Well, those that are regulated.
Or should it not be a concern?
No. Well, it depends on the level of the investor, the knowledge of the investor in these things. Why we are protecting investors is because this is the public investing. So we don't want to assume that everyone is aware of tricks that can be done on the market. So that's why we put all the safeguards. But if it's someone like a layman who wants to invest, I will advise always to look at the regulated financial service providers and also regulated products where your interests are protected by the regulator. But when it comes to sophisticated investors, those are investors who are experienced, who knows exactly what they are doing. Those those are like private equities. Actually, they are institutional investors or business angel investors. You have heard about them. Angel investors. Those are people who are always into this. For them, they are allowed to invest wherever they want because they know. They have the balance. They know what they are doing. They know the risk they are taking and all that. But when it comes to the investing public, we advise always for them to invest in regulated products.
Yes.
Where if they cannot have the necessary information, at least we have.
Yes.
At least we have
somebody
looked at
watching your back who
yes.
you can rely
At least
on.
we have. And those licensed entities, licensed institutions, at least they have they have a code of conduct which is totally different from someone out there doing their own things without necessarily following any rules. So that's why for a layman, for someone who is investing, I will advise for them to go into regulated market.
All right, Noella, thank you so much for taking the time to talk to us.
Thank you very much.
It is very reassuring knowing that we are covered and protected should we want to invest in capital markets.
You're always welcome in the market. Yeah.
Okay, well, that's all the time that we had for you. I really wish we had more time because there's so much more that we can learn when it comes to how or why we should invest in capital markets. I am Isabel Masozera. Thanks for watching.